All right, here we go. It is Friday, September 26th. Little video here on SOXL. This is one of my favorites to trade, semiconductors. So a lot of this is trend lines. We're going to look at the chart this morning. Now, 34, you're seeing it come about pre-market, 33.75. This is very early. Actually, this is yesterday. Here's pre-market right here at 4 a.m. So 33.75 you get down. I'm not trading. I don't open my account till 7 a.m. I'll trade pre-market. It's gonna be 7 a.m. 33.75, you go down. So you're watching pre-market. What's it doing? It's a big drop. We bounce. It's coming back up. So you're looking for 33.25, then 33.39. Now it starts to go up very nicely. Seeing this 3-minute low to high right here. And then you go to 33.50. 34 and all the way to, you can say like 34.46. Here's your trend line right here. Now you can make it tighter, yeah, right here, but eventually it slides over to right there. So that's one trend line on the 3-minute. Then you're coming down. Here's your big short. What's it doing? Is it going up? Nope. Few candles. See, a few green candles doesn't mean anything. It has to actually start to go up. These are just, going sideways, hitting that big short here, 34. Now, some people might put a trend line all the way across here. It's too far. Once the move changes, this one's straight down, then I'm changing it to, I move like this, very tight. And you see the 33 hold right here, 33. And then you see how many times? It's like 10 times it held. And now what do you have here? Once it has this low wick, even here, you have a trend line starting to come up now. And then you have the break at 33.25, and you can say even 33.33, start to climb back up. Look at the market too. I have the Dow beside me, I have the NASDAQ. I'll show you right here. Then this. I have the Dow, NASDAQ, S&P, Russell. So I want to see what the market's doing with everything basically. And you start to go up, and look at this. A lot of candles in here, back and forth, some reds, some greens. Kind of choppy, but it's going up. What is the trend up? You touch the trend line, then nothing. Then you're going back to 34. Right now, you're starting to bend a little bit. See stochastics down. Hasn't really moved out yet, but yeah, there it is. So you have 1, 2, 3, 4 trend lines on this. And this is more of a choppier play. But you could trade pre-market. That'd be one whole move. Maybe in here is another 2, 3. Once this comes out of this and you're at this low, maybe another move up. That's 4. So a lot of moves in here. And remember, you only have to get quarter might be a little bit too small depending how much you're trading. I'd say at least 50 cents. 50 cents will be very good. I always try to look for each day 500 to 2,000. Now, my account grows and I have enough to trade even more. And I'll probably up that to like maybe 1,000 or 3,000. Yeah, the risk reward, it doesn't matter. You just want to make big trades. You want to get into a flow and get into that range. Once end of the year, you have all this money, 500, 700, 400, 1,000, 2,000. There's going to be days, it'll be up and down. Nothing will be perfect. Just like the charts, nothing is perfect. You make 300 one day, 900. That's still 1,200 in 2 days. You know what I mean? You haven't looked at it that way. Everyone's looking at people online, all these kids, they're all scamming. 95% of these kids online are scamming. I don't know how people are believing it, or I don't understand. That's one kid has a course, it's like $10,000. $10,000 a course. It's insane what's going on out here. All right, so we're starting to fade right now a little bit. Now, if you want to play this, you broke trend line, you're playing 34. See, this line's too small. I'm not playing it because it's going to rip right through these. That's playing these quarter lines, 34, 25, 34, and that's where we're at. So pre-market's important for me because you can see where you're going. What's the trend? What's the market doing? Did the market crash overnight? Or who knows? So you can see the plays developing. This is a classic move. That's all not just trend lines too. Really depends what the market's doing. And of course with this, SOXL, this is on a run up from basically 24. You come out this little wedge, the daily chart. What's your daily chart doing? This went straight up. And then you hit a wall here, very overbought. See, it's fading down ever so slightly. It turned into a short. We're coming back up. So it's very choppy. The 4-hour chart. 35. I mean, it did go to 31, a small move. Now this fading, this could be a fake out. You're still going down. You did have a cross, but look at this. You're going down 60-20 on stochastics. So, we'll see how this plays out the rest of the day on this. But yeah, for day trading, you want to keep it simple. All you're looking at, volume, the chart candlesticks, whatever you use. And then I have one indicator. This gives me a general idea. See, we're oversold here. Yeah, oversold here, but it's gonna be all different. When you go down here, it's oversold, but look what it got all choppy here. It's not just the indicator, you gotta look with your eyes and see what it's doing and make sense of it. You ran here to here. For what you're trading to, ETF right here, this will trade $1 a day, sometimes $2, even $3 if it gets very busy on the day and a lot of action in the market volatility. So when you see a low to high move like this, and then look at this, all the way back down, you can see the range right here, and then back up. So basically, the range today is at 33, the 34.50. Now, this kept going and going, and you're up $3, $4. Then you have a wider range on the screen here. So it's not that complicated. Now, this is trying to come up here in this 3-minute. Now, let's take a look at the 5-minute. 5 minutes going to slow down. These candles are each 5 minute. We go up, back down, trying to put in the hammer, but it's still straight down. 10-minute, you see the move down pre-market. Then you sort of sideways, then you go back up, then you fade and straight down. And look at the 10 minutes, so clean, the chart almost. Wicks, 1, 2, this one's a little higher, 3, 4, 5 wicks, then we're going straight up. And then look what happens here now. You're fading from 1:30, where we're at 2 o'clock. So showing a lot of red candles up here. It's not the best scenario to go long. You just ran low to high. So we'll see how this plays out. So each move, 3 minutes gonna have more candles and it can throw you off more. It's a 15-minute. 15, down, up, down right here. Look at all these wicks. Then you go back up. It's a crossover right now. As you go higher and higher, it'll be cleaner. 30, hour, weekly, monthly, whatever you're trading. That's why in day trading, you don't have to catch every move. You catch here to here, 50-cent move. Here to here's 50 cents. It doesn't have to be a monster move. It's going to be most likely for you. You're trading at $300 a day, 500, 700. 700 one day is great. Can you imagine making 700, let's say 3 days, 7, 14, 21 times 4, it's like 8,000, whatever. And you're looking at, 90 some thousand a year just from trading 3 days a week and catching little moves. It's sort of hard to believe when you're locked into this screen and these candles. So it's pretty amazing. So trend lines work, but nothing's gonna work perfectly. Like if you put here, trend line right here, and then it goes wider, it's always gonna be off slightly. Look at the wicks go over it. Nothing's perfect. Now, do you have to go, wick up to here? That'll put it wider. It's just how you're trading. To me, I want to get as much of the body as I can. So it's gonna run across here. And you can see right here. So that's it. We'll see what happens the rest of the day. The market's up. It's fading a little bit here, bouncing back. And that's basic of trend lines here. I can do it too on the daily chart. I do all this because I trade this a lot. And look at the low moves. Now, you were coming up from April. Then we kept going, not really. We went sideways, back and forth. These were short, quick moves, a lot of volatility. Then we finally broke out again. It is 25. And I use an algo system. You see these circles? This is a daily chart algo. I have a system I pay for. So it sees that. Now, sometimes it's not perfect. Maybe you thought in here, in your own eyes, it'd look better to get in, but the algo picks it up there. It won't be perfect. You got to put it with your own thoughts and vision, the algo to see if it makes sense. And then I use this, stochastics. This is one of the best indicators, fast moving indicator. You have a crossover really right here. And what happened? White over red. Look how smooth. There's nothing here. These candles are nothing. Not until you get up here. Now, up here is even harder. You get up here, you crossed over by a big shooting star. It can throw you off. You got to look at the move once you have a crossover. You see if it makes sense. Like back here in June, you went up, but look at this. You're very volatile up here. It's very choppy being this overbought, and it kept going, but look at it, back and forth. The signals are all messed up. That's why some of the best times is low to high, but it won't always be that way. See, if you got in here, you're getting the overbought. Look what happened, kept going. Each scenario. So you have to put in, where you're at in the market, what's it doing? Is it overbought? And is the market strong? It doesn't matter. You can stay long in these if you're overbought, 28, keep going. You just got to know where you're at. Once you're low, you get higher and higher. Know where you're at on the chart. Getting overbought, that could easily mean a pullback. Yeah, it could be small and then you keep going. But eventually, when you're up here, you're going to get bigger pullbacks. Daily chart, of course. The weekly chart's going to slow it even more. You had this move all the way from July, August 2024. You came down. Look at this, 10. The best time to buy in April, the tariffs. It was all a big, fade in the market. Trump saying all this stuff didn't really do anything. People are panicked on CNBC and all this. They always do that. Look what happened. Low, all the way up. There's no crossover between white and red. See this? Nothing. And then you bounce back. Then you're staying in the zone 80 to 100. You're staying up. And you're pretty much all green now. Monthly chart. This is where I wrote back in 2020. So 22 months from the low, the COVID low, 357 to 74. If you were to wait 22 months, you went back to the high. Right here, then you had a short, and then you can see in the chart how oversold they are too. And then this one was 21 months from the low, 2022, 621 to 7008. Come up. Now this was a little tougher because there's a fade here on 3 months, and then you powered up and candle here, got a little more choppy. So once you hit here, could have got out and got back in for a crossover signal again if you're playing longer term. And then look what happened here. So on the high here, 7008, we went all the way down. Look at all these red candles. You have a crossover on the monthly. You could say 5, like April, right here. And then look what happened. You're white over red, and this is going up, and this is going to go right back on the highs. I mean, it looks possibly at this point, and maybe some sort of dip here that could happen. But eventually, I'm looking for anywhere 65 to 70 again. You're going to move up, down, and maybe this does this, pulls back to 30, gets a run up. You will hit around that range, at least 55 to 70, I said. Back testing this absolutely works. 70 left looking strong. You see the monthly crossovers, even 2019-20. Look at this, 22-23, and 25. Look at this. So each time you go further and further out, let's look at the quarterly. Quarterly, all green candles up, all red down. Quarterly is one red candle here. That was in 2023. Get the crossover up. Now look at this in the quarterly. Look at the red, so wide against the white. Now you're actually crossed over. That is big time. When you cross, quarterly, that is a good sign for longs. And so that's where we're at. And so you can see all this intraday moves, the daily, these are little time frames. And you play here to here. Look at that. That was like 7 days. And what is this? Like 10, 12 days you would have made bank from. 27, 34. It's a nice $7 move on a swing. Your stops down here. That's why I like ETFs more than penny stocks. They're too wild and they're manipulated a lot. And they could be up like this, got down one day 20, and it's total manipulation. Very hard to trade. All right, so that's it on SOXL-Trendlines. And looking at this overall chart, you can see when you go 1 minute to yearly, candles will decrease, and it's just how you're playing it. Maybe you trade monthly. You just want a monthly crossover trade for 6 months to a year. It all depends what you're doing. It's all the strategy and implement your strategy. All right, that's it. Please subscribe to Mike Kim Trades on YouTube. Smash the like button. I'm on tons of other social media. Check it out. Peace.